yesterday, that's just the account with more than one person, and you both have equal access and equal liability. An express checking account, also sometimes called an e-account, is an account where you won't pay any fees usually, like no monthly maintenance fee, and they don't have deposit requirements. However, with an express checking account, the idea is that you do all of your banking via the phone, the computer, or ATMs. Most banks, if you have one of these accounts and you actually walk into the bank and talk to a person, you get charged for it. I don't know, the fees depend on the banks, but when I had one of these, if I walked into the bank, it was $5. So if I talked to an actual human being at the bank, $5 every time. But you know, those can vary. A NOW account, NOW stands for negotiable order withdrawal. The kind of checking account, like the basic checking account that most people have, is known as an on-demand account. You have access to your money on demand anytime you want. With a NOW account, the bank has the right to say you have to give them advance notice before you can withdraw money out of your checking account. So they can require up to 7 days before you're allowed to write a check or make any transactions that take money out, but they do pay interest and they don't charge fees. But the idea behind that is because they're paying interest, they're using your money for other things, and so they need the advance notice to make sure the funds are available. And they're not terribly common anymore. A Lifeline checking account, you guys have heard of the Lifeline cell phones and things. It's basically the same idea. It is, some states require that they exist, other states don't. But a Lifeline checking account is available for low income. You have to have income qualifications to get one of these accounts, but they have no fees or low fees. So with a Lifeline checking account, for example, if you overdraft in a normal account, we said it's like between $20 to $35, $50, somewhere in there, usually right around 30. But a Lifeline checking account would charge maybe 10. So they have much lower fees, but there are income qualifications. They may also have limits to the number of transactions that you can perform in a month, just like the Lifeline cell phones have really small numbers of minutes that you can have. So it just sort of depends. And then you have, you know, a single account, which is an account owned by one person. Most of you probably, if you have a bank account right now, have a single account, I would imagine. And you're the only one that has access to your money, and you're the only one that has liability for anything that goes wrong with the account, if you're the only name on it. These are not so popular anymore. A lot of people don't keep a check register because a lot of people don't use a checkbook. But the check register is your handwritten account of every transaction that you make in your bank account, your checking account. So anytime you would write a check, use your debit card to buy something, any deposits you made, any fees, any withdrawals, all go in the register, and you keep a running tally of the balance that you have in your account. With the ease of online banking and the apps on the phones and everything, people have stopped using check registers. However, if you don't keep a register, then you don't know if the bank's information is accurate. For example, that Target debacle that happened last year where people's information was stolen that had the Target debit cards. If you shop at Target all the time anyway, and then somebody got your information and did a transaction at Target, if you didn't have all of your Target transactions written down, would you notice? No. And then somebody stole your money. That's why it's a good idea to keep a register. You keep a running log of everything that you do. You know exactly how much money you have in your account. Another reason is because sometimes transactions take a couple days to post. So you go and you say, oh, what's my balance? Oh, I have this much money, except maybe you don't because a couple transactions that you did 2 days ago haven't gone through yet. And then you overspend and you overdraft your account. If you keep a check register. You know exactly what's going on in your account at all times. You can check against what the bank thinks happened, against what you have written down, catch things that are mistakes. You'll know exactly how much money you have in your account so you don't overspend. It's a good idea. Debits is just a withdrawal out of your account, and credits are deposits into your account. So if when you look at your check register, there will be a debit column and a credit column. We'll go over how to do all that and how to balance checkbooks and everything. Allison currently has a balance of $2,300 in her checking account. She deposits a $525.33 paycheck, $20 rebate check, personal check for $550 into her checking account, and she wants to receive $200 in cash. How much will she have in her account after the transaction? Well, first we're going to show you how to fill out a deposit slip should your bank still require these. So we'll put today's date, and her name is Allison, and we don't know her last name, so what do you think? Jones? Jones a good common last name? Okay. And her account number is 1, 2, 3, 4, 5, 6, 7, 8, 9. Because you know it's very stable and secure. Okay. She is depositing a check for $425.33, and all checks have to be listed separately. $20 rebate check, a $550 personal check, and she wants to receive $200 in cash. So first we add up the checks. Less cash. This means that the cash that you want to get back out of the checks. And so your total deposit is going to be $795.33. Sometimes this will say cash back, depending on the format of your bank's deposit slips. If, of course, your bank still requires deposit slips, some of them don't. Now, Allison had a balance of $2,300. She made a deposit of $795.33 because of the $200 that we took out. So her new balance is $3,095.33. The check register is a little paper book the size of a check, so like about that big. And when you open it up, you know, it's got the staples down the middle, and the whole sheet looks like this, except, you know, longer. And they typically have this like white blue thing going on, or like white light green, or whatever, white and gray. And you have a choice of how you want to set up your checkbook register, because it's your personal checkbook register. Yeah. So some people like to set it up like this, where you put one transaction in each of these spaces. Other people set it up where, since there's two lines here with the light and the dark, they do two transactions in each of these spaces. It just depends on personal preference, and do you want to save paper or save space, or you know, however you want to do it. I usually do this more of a setup, because then if there's any notes that I need to write, I can write them in here. Like if I'm paying an electronic bill and they give me a confirmation number, I write the confirmation number in there. Or, you know, if just anything that needs extra. Plus, I don't typically use a calculator, so then I do my subtraction over here, and so I have a line to do it on. But, you know, that's just me. That's personal preference. But what you want to do is you look at the first column that says item number. Now, We have check numbers go here, because remember when I said every check only gets used once? So you want to keep track of your check numbers. So check numbers go over there. This is E for electronic, or you can put, V if you have like a Visa check card. You put a V for Visa, or whatever, however, whatever makes sense to you. ATM, DEP for deposit, or just D for deposit. This is your register, so the code is what needs to make sense for you, but you do want to put in check numbers. Then you put the dates, and the dates are important because you need to know when things happen. Then you put a description of the transaction, and you can get as specific or as general as you want. You can, like, I don't know, let's say you went to Target, you'd write Target, and then you could write new clothes, or groceries, or whatever, or even just write Target. It's up to you. The debits, this is the amount you paid. That goes in this column, and whole dollars in the first part, change in the second. Then you have a column for fees. This is a column where, remember we talked about if you go to an ATM and you use an ATM that's not your bank. So you withdraw $20, you put the 20 here, and then it's a like $2 fee, you put the fee right there. Like any little fees that go along with the transaction usually go right there. This column that has a check mark is used when you're balancing your checkbook. Yeah. So this is once the item has cleared your bank, you check it off. Like when you get your check statement, or however, if you still get a paper statement in the mail, you do this when you get your paper statement. If you're using electronic banking, and then you do this whenever you check your bank to see if it's cleared or not. You check off the things that have cleared, and then this column is deposits. Or, sometimes you refund things and they credit it back to your account. They don't give you cash, that kind of stuff. Any money goes into your account goes there. And then this is your running balance. And you should be at any time able to look at this and know exactly to the penny how much money you have. Okay. So Nick had a checking account, and he has some paper checks he wrote. He had a deposit, he had some electronic stuff, and we want to determine his balance. Okay, so these are all subtracted, and this is all added. So if I'm doing my method, which I do all my addition and subtraction by hand, because usually I don't have a calculator when I'm trying to do this. I'm like at a store and I just do it right then. So I do minus 1721, and so that's 27. 2 minus 1 is 1, 7 minus 2 is 5, 6 minus 7 doesn't work, so I make it 16, so that's 9, and then 2 minus 1 is 1. Or, or if you don't want to do that, and you want to dig out your calculator, because everybody has one on their phone, then you don't have to write it in, and you just take that next number, 1951.27, and you subtract 3250, and you can write your new number. So whether you write in the subtraction or don't write in the subtraction is up to you. Just know that you're subtracting this, adding this. So this is going to be plus 821.53. And then we subtract 101.50. And then you subtract 138.90. Okay, so his balance would be the $2,499.90. This is called the register balance. So when we get into balancing the checkbook here in the next section, that's the register balance. That's what you're going to be looking for when you're asked to find the register balance. Things have gotten pretty instantaneous. So if I go and I swipe my ATM card and buy some milk at the grocery store, it usually will show up that day. However, if I use that Target debit card, it takes about 3 days before it shows up. For some reason, if I buy gas at the gas station with my debit card, it takes a day or 2 to show up. So it just sort of depends. Your bank statement, if your bank is doing like the actual month, like an actual calendar month, they'll start it on the 1st and they'll end it on the last day, so be that the 30th or the 31st. If you do some transactions on, say, the 28th and 29th, or even that 30th, then the bank processes your statement before the transactions have cleared. They won't show up on the statement even though they occurred in real time during the transaction period. But because things sometimes take a day or 2, they may not actually show up on the date that you did that. And especially if you write a check. If I write a check to pay my electric bill and then I stick it in an envelope and I mail it and I write it on Monday, the electric company receives it Wednesday or Thursday. Then they deposit it that night probably, so it hits their bank, say, on Friday, and then their bank has to process it to my bank, so it probably won't come out of my account until probably the following Monday. Now, there's no guarantee of that, but I'm just saying, like, it can take that long, so things may not actually show up right away, even when you look at your statement, and that's another reason to keep that accurate register, so you know. So like I said, most banks will do the actual calendar month. Some of them do 30-day periods. It just depends on the bank. Your starting balance is the balance in the account on that first day at the open of business. So if they call 8 a.m. the open of business, that's the balance you had at 8 a.m. that day. And then the ending balance is the balance on the last day at the close of business. So if they close at 5, that's the balance you had on the last day at 5 p.m. And then the transactions will be anything that occurred that they actually processed between those 2 times and days. Outstanding deposits are deposits that you made that haven't showed up on the statement yet. So for example, if you make a deposit on the 30th after 2 p.m., always say bank deposits made after 2 p.m. will show up on the next business day. So if you make it after that date, it's not going to show up on the statement. So you may have made it in the transaction period, but it doesn't show up on the statement yet because it didn't process by close of business that day. Deposits made through the ATM can sometimes take a couple days to show up. Yeah, it just depends on the bank. So any deposit that you know you've put in the bank, like I know I made that deposit, but it's not showing up on the statement, it's called an outstanding deposit. Okay, then we have outstanding checks. Okay, so the outstanding deposits are deposits that you know you made that didn't show up on the transaction record yet on the statement. Outstanding checks, it's not just checks, it's basically any debit, any transaction where money came out of your account that you know you made, but that didn't show up on the statement yet. And usually those have occurred right around the end of the month. And so they didn't process before they printed the thing, or sometimes they email them, whatever. Balancing a checkbook is reconciling or verifying the information between your bank statement and your checkbook register. Basically, it's when you look at, okay, this is what the bank says has happened with my money, This is what I say has happened with my money. Let's make sure it matches. And that's to catch your own mistakes or also to catch bank errors. And not just bank errors, but in case somebody did get a hold of your information and took some money out of your account. It does happen. I once had a hold put on my account, and when I called my bank to find out what was going on, they said, "Are you in Luxembourg right now?" And I said, no, in Orlando. And they said, okay, because right now you're trying to buy telecommunications equipment in Luxembourg. And I said, yeah, no, I'm not. Not in Luxembourg buying telecommunications equipment. Promise. Somebody had gotten a hold of my information and was in, of all places, Luxembourg, trying to buy stuff. Now, if my bank hadn't caught that it was weird for me to be in Luxembourg, because, maybe if I was a traveler, it might not have shown up as, weird, then it would have gone through. I need to catch it. Yeah, it just depends. But for me, here's what we're going to do. This is a sample bank statement. It's not obviously a complete bank statement. It's just sort of the transaction record. We have 2 deposits and 4 checks. Okay. And then on the next page, when you flip over, you have a checkbook register. These are both the same persons. So what we're going to do is we're going to compare this checkbook register and this bank statement. Oh man, hold on a second. Okay, I must have cut that off somehow. I'm not really sure what I did there, but there should have been a starting balance and an ending balance. So what we're going to do is you'll notice when you look at this register here, do you see how 3 of these are already checked off? Anything that's checked off showed up on the last statement. So you can ignore those. So what we do is we're going to look at this statement, and anything that's on this statement we're going to check off on this register. Okay, so I have a deposit for $35. So I go and I find my $35 deposit and I put a check there. Okay, so I have basically anything that matches between the two, you put a check mark next to. I have a deposit for $100. I find my deposit for $100, I put a check mark there. I have check number 1770 for $158.08. Now when this happens, I find 1770 and I check that the amount matches the check number. The reason you do this, did anybody see that movie Catch Me If You Can? How he was committing all that fraud is he was taking real checks that people had written and adding numbers and taking the ink off and changing the name and stuff. So you want to check your register to make sure the amount matches what the check number says. Just always, and these are rare situations, but you don't want to be the one that it happens to that you don't catch it and then you lose your money. Okay, so then I have check 1768 for $46.50. So 1768, $46.50, it's good. 1769 for $74.64. 1769, $74.64, and then 1765 for $19.50. Okay, now you'll notice we have some checks that still haven't cleared. This one hasn't cleared. The dates will be different. Yeah. Here's why. Because when you write that check, it's a hard physical copy of a check. It has to be deposited by the person that you wrote it to, and then their bank has to process it to your bank, and then your bank finally gets it, so it won't match by a couple days. So the dates on the statement and the dates in your register won't always match. They can be. Yeah. It just depends. It just yeah, it can, because if, let's say you write a check to like a person rather than a company, like rather than a business, they can hold on to it. A check is good for 90 days from the date that you put on it. So if you wrote a check to just any normal person, they could hold on to it for a little while. Maybe it's like a handyman or something. Maybe they hold on to it till they get a stack to make the trip to the bank or something, you know? Yeah, it can be annoying, but it's not illegal, so nothing you can do about it. Okay, so these did not clear. Everything else that's checked off has cleared. Okay. Everything that's checked off you can ignore because it's been accounted for, so it doesn't matter anymore. Okay, so to find the balance, to make it balance, what we're going to do is we're going to take the ending balance of our statement. Okay, we're going to add outstanding deposits. And we're going to subtract outstanding transactions or debits. And what that will give us is what's called a revised statement balance. Okay, that should match this. So the revised balance needs to match the checkbook register balance. If it matches, everything's golden. If it doesn't match, then you need to start looking for mistakes either on your end or your bank's end. So from before, our ending balance was $628.23. Now I need to add outstanding deposits. So first I need to find out, are there any outstanding deposits? Oops, I forgot to highlight one. Darn it. That hadn't cleared yet either. Okay. This is an outstanding deposit. These three deposits have check marks on them, so they're not outstanding. So I'm going to add 125 to that. Okay. Then I need to subtract my outstanding debits. Okay. I have 1, 2, 3, 4 transactions that don't have check marks next to them that are debits, so I need to add those up. And so my outstanding debits is 112.10, and so I need to subtract 112.10. Okay, so just to clarify, this is my ending balance, these are my outstanding deposits, these are my outstanding debits. And when I do all this math, I'm going to get 641.13. This is my revised statement balance, and this number right here needs to match this number right here, and as long as they match, you balance. So this is balanced. The other thing, if you don't get a paper bank statement, you just do everything electronically, you can still balance your checkbook. You just go into your bank account online and look at all the transactions that are there, check them off if they're there and on the online, and then compare your balance that says you have online to the balance in your checkbook after you do this math. And then if you're doing it that way, you can check it at any time. You can check it every couple weeks. You can check it like on the first of every month. Just, you know, whenever you want to. Okay, for homework in your packet, I need to grab a packet.